All right. Today's SPY was up 0.12%, and we did continue to close back above that 5 EMA, so we still are holding on to this bull trend. And tomorrow is essentially going to be a waiting day before we get the PCE data on Friday, so I'm not expecting anything major to happen until Friday as far as the indices breaking out of this range. And going into the PCE data, or even going into tomorrow, I still think this is an extremely simple chart to trade. There is very easy levels we need to be managing risk from. And of course, this is still a bull trend until it's not, because there's nothing on this chart that has told us we are rolling over and losing the bull trend. I know there's going to be plenty of speculations about why we may roll over, but we need price to prove it. And right now we still have price action above all the moving averages. All of the moving averages are still positively sloping. And the only thing the bears have in their back pocket is the potential, and I say potential because we have no proof of this, is that they are going to bounce it up to about 547 and then reject it down for a lower high into the lower low. That's going to take us down to 537. Now, the first thing you need to understand is this is an arrow of what may happen. There's still so many of you getting it wrong, and so many of you thinking that the way we trade is that we try to guess where the market's going and then position towards that, and then we hope that we're right for the potential that we're lucky and we're gambling that we're going to make money, and you still don't get it. You don't get it because I'm teaching we follow price, which means we are letting price do all the talking. We could not care less if we go higher or lower. Our job is to make sure we're on the right side of the trade, and that is how you make money being a trader. You don't make money by guessing, and you don't make money by gambling. And if you are going to guess or gamble, at least do it in the direction of the trend. And this is currently against the direction of the trend because it's assuming we're going to go lower. And I just got done telling you we're in a bull trend. So the easiest way to play this, and I do agree it's very risky to be buying up here because going down is going to be the elevator down when the time finally comes. But you manage your risk, and you can manage your risk through position size. And obviously there's stop losses and other tools in place that you are controlling your risk to the downside if you are still buying long. But one thing you need to understand is that it's okay to just sit back and watch if you don't see any great trade setups. And today we absolutely crushed it on stocks like Tesla, which I've been talking about going higher. And there's plenty of opportunities in other stocks and plenty of good risk reward setups. And there are still great trading opportunities in this bull market, even if you're too scared to buy the indices up here. So in the Discord server, there's going to be a ton of trade ideas, and there's going to continue to be more and more of them because volatility is back in this market. And if we do get this bearish rejection from this lower high and we go lower, that is actually going to be even better for traders because traders love volatility, and that is going to bring volatility to this market, and that is the kind of volatility that traders love. So yes, I would love to see SPY go lower, but that doesn't mean it will. The market couldn't care less what I think, and the market couldn't care less what you think. And because we're in a bull trend, the highest probability chance is that we actually just continue to go higher. However, I think you should be a little patient here and wait to make sure price can break above 547. If price can break above 547, there is a very good chance we are going to a brand new all-time high just below 555. So I don't think it gets any simpler than that, because we are either going to break above 547 and continue the bull trend, which is going to lead to plenty of great bull trades for us, or we are going to get rejected from 547 and make that lower high into the lower low at 537. And then we are going to get great trading opportunities, either shorting the market lower or long opportunities at support. So this is a very exciting time to be a trader. You should have tons of dry powder. You should be very excited for volatility coming to this market. And you should have a trade plan that is prepared for either of the scenarios I just drew on your screen. If we go higher and reject and go lower, you should know exactly what you're going to do. And if we break through resistance and go higher, you should know exactly what you're going to do as well. That is not predicting. That is not guessing. That is letting the damn chart do all the talking. And that is how we trade, and that is how we follow price action. If you think we are trading any other way, you are simply misunderstood, or you just don't understand what it means to follow price action. And that's fine. That's why I'm sitting here teaching you what it means. And if you do start to understand this, you are going to unlock a brand new world of profitability, and you are going to finally understand what it means to let the chart do all the talking and manage your risk around critical levels. Remember, if you are trading, you should not be risking more money than your potential reward. So make sure you understand when you enter a trade, what your risk is, what your risk you're willing to take, and what your potential reward is. And if your reward is not greater than your risk, you should never take that trade. It makes no sense to risk more money than the potential reward, because if you continue to let your losses erode your profits, there is no way you're ever going to be profitable, and you're just spending a bunch of time to lose money. And I can think of a lot of better ways to spend your time. That is why I teach you to manage risk. That is why I teach you to follow price action. And that is why I teach you to be a disciplined and profitable trader. If you're not a disciplined and profitable trader, you might as well just become an investor, because at least then you get all of your time back. And if you're just spending your time to lose money, that is not time well spent. So learn how to do this the correct way, and that way you can continue to be profitable no matter the size of your account. Some of you are still gambling in the options market, and it's completely fine. You can do whatever the hell you want with your money. You're just never going to get anywhere in the long term doing that because you're going to continue to lose money, and it's not scalable as you continue to grow your account. So learn these processes, learn how to follow price action, and that is exactly what we're doing each and every day in the Discord server. And during these volatile times is the best time to be a trader, so just keep that in mind. And now is the best time to get plugged into the Discord community if you've been thinking about it, because we are about to go into a very volatile market. On the NASDAQ 100 triple Qs, we were up 0.21% today, and I told you, like SPY, we need a rejection from a lower high if we expect to see these lower prices, and that lower high that I'm paying attention to is right around 484. If price goes up towards 484 and we get rejected and start to come down lower, I will be looking for a target down here at 468. If we break through 484, then it is possible the bulls will just continue to push for a brand new all-time high, which is going to be right around 493. So above 484, there's really going to be no reason to be bearish, but while we're below 484, there are still going to be sellers in this market and bears looking for this lower high rejection. And there is a good chance that we could still go lower. However, the odds are still in the favor of the bulls because we have the bull trend with the price action above all the moving averages. Keep in mind, this is not even a weak bull trend. This is a very powerful bull trend. All of these moving averages have separation and they're all positively sloping. And that's about the strongest a bull trend's ever going to get. So if you're shorting it, you are still taking the lowest probability chance to be correct, but at least it's low risk. So I'm not telling you can't short, you obviously can, but it is a low probability trade. And that's why people are still buying the dip, because the probability favors that we'll go higher in a bull trend. This is very easy stuff once you understand it and you understand how to follow price. If you don't understand how to follow price, it probably does sound confusing and it does sound like the market could go up or down, but that is the truth of the matter, is that the market can go up or down. So if the market can go up or down, you need to understand on when you're supposed to react to it. And if it's going up, you need to know when you should go long. And if it's going down, you need to know if you should be selling your longs or trying to short. And that is where the trade plan comes in, because there's no one way to trade. Everybody can have a different trade plan and still be profitable. You just need to make sure you're managing risk, and that is the only way you're going to be profitable. So there's too many of you talking about how is the correct way to trade. Nobody can tell you how to trade. As long as you're profitable and you have a strategy that is working and you know how to manage your risk, then you have a working strategy and you're a profitable trader, then that's fine. So what I want you to focus on is following the price at these levels, and the critical level is 484 above and below. That is going to tell us everything we need to know. And you do need to be open to the idea that we could get a lower high rejection and come down to these lower targets, because as I always tell you, the bears will take the elevator down when the time comes. And if you are not prepared for that and you are still messing around being over leveraged in something like call options, you will get wiped out and you will blow up your account. And I will tell you, I told you so, because I've been warning about the possibility of this lower high rejection. Doesn't mean it's going to happen. You need to be prepared for it. So watch that possibility as we come into the end of the week, and do understand on Friday it is going to be a pre-market move. So you need to make sure your risk is controlled before the bell closes on Thursday. On the Dow Jones, we were up 0.06% today, and the Dow Jones did everything it needed to do, which was continue to close above 391 and hold this support zone between 388 and 391. And as you can tell, we closed right on top of the 5 EMA. And the Dow Jones is one of the indices we need to see starting to show some bullish strength if the bulls are going to continue to push, because the market breadth got very narrow into the Magnificent 7 tech stocks, and we need to see the Russell 2000 and the Dow Jones joining the rally to continue the bull trend. So for the Dow Jones, it is as simple as managing your risk between 387 and 391, and as long as we can hold above those support zones, I am thinking it's possible for a brand new all-time high around 402. On the Russell 2000 IWM ETF, we were down 0.26% today, and we still have price action below all the negatively sloping moving averages. However, I do believe it is possible this could be a reversal of the downtrend very soon. And if you want to be patient and just wait for confirmation, that is going to be the break above 203 to 204. But if you want the low risk entry and you don't mind losing if we break down, then you're buying longs and you're managing risk down here right around 198. If we break down below 198, you need to realize that tiny loss, and then we are likely going lower to 195 and then 193. On the RK ETF, we were up 0.58% today, and we're sitting right at the resistance at the negatively sloping moving averages within a bear trend below 44, and we're staying risk off below 45. And while we have the bear trend, we're looking for lower targets at 42.4 and 41. On the VIX, we were down 2.34% today, so the VIX is still crushing, which favors the bulls with a low fear environment that is more indicative of a bull trend. And until we see the VIX spiking above 15, I think we're going to maintain sustain this bull trend and continue to make all-time highs. On Bitcoin, we are currently trading just below 61,000, and we are getting rejected below that negatively sloping 5 EMA, which I told you was a resistance right around 62,500. And this is going to be a very bounce or die support zone at 58,000, because below that, I do think we're going to get a flash crash to 53,000. However, if the bulls can hold above 58,000 and they can turn this into a higher low into a higher high, the bottom could be in and Bitcoin could be ready for another face ripping rally up to about 75,000. But in order to confirm that Bitcoin is ready to go higher, I want to see it breaking above 64,000 and showing higher lows and higher highs. On Nvidia stock, we were up 0.25% today, and Nvidia did get another day closing back above 122, and I told you above 122, it's completely fine to be bullish, and I'm going to stand behind that and reiterate that above 122, it is completely fine to be bullish. However, if we break below 122, especially if we bounce to a lower high and then come crashing down below 122, that is going to look very bearish, and in that event, I do believe we will come down lower towards a gap fill and support zone between 107 and 110. So you have one last shot to be bullish here, and that's above 122. If we break below it, it is risk off, it is bearish, and it's going a lot lower. And I do believe it is going to be in a very fast fashion if we do break support. We are going to flush to the downside, and I think it's going to happen very quickly. Now, I say if it happens because it doesn't have to. If we're above 122, it is still possible we push to a brand new all-time high. So 122 is your risk level. There is no easier way to say that. Below it, we are going lower. Above it, stay bullish because we still have a bull trend. On Tesla stock, we were up 4.81% today, and we absolutely knocked this trade out of the park because yesterday it was giving us all of the indicators we needed to know that it was going higher, and today it absolutely followed through. And we were fully loaded in this position and absolutely crushed it today. And the bullish trigger that I told you to watch was that close above 185, which we did get yesterday. And then today, with the bullish breakout above the previous high, we were just well on our way on a rocket ride straight to the target at 197. But right now, we are outside that upper Bollinger Band, and I still do think we're going to 207, but I wouldn't be surprised if we cool down a bit. Maybe build out a bull flag and get some energy to break through 197, and then we should be well on our way to 207. At this point, you should have been locking some profits here. If we start to pull back, you could buy the dip, and right now we're staying bullish above 185. On Apple stock, we were up 2.00% today, and we do have the bull trend yet again. We're back above 212, so this could have been the pullback before we're going for another brand new all-time high, and if we do break 218, we are likely going all the way up to about 230, which is going to be very bullish, but I want you to be very careful here because I don't think there's a lot of upside reward until we break above 218, because from today's close to 218 is only about 2.3% to the upside. And if this is a lower high and we are going to get a rejection down to the support at 204, then you still do have about 4% to the downside. So the risk reward still does favor the bears until we get that brand new all-time high improver going higher. So be patient here in Apple. I do think this is no man's land. If we break above 218, I think you can trade it up to about 230, but below 218, I would be very cautious that we could get a lower high rejection. And keep in mind, sometimes the best trade is no trade and simply sitting back and watching. But if you're an Apple bull and you absolutely have to be a bull on this stock, just stay bullish above 212. And if we break down below it, be very risk off. So jumping back over to the S&P 500, understand what it means to follow price action. It's going to be very important that you go into Friday correctly positioned to manage risk because the PCE data is coming out and it is going to happen very quickly on whether we gap up or gap down after that report. And the bull trend does favor we could go higher and continue to make brand new all-time highs, but there is a lot more downside risk than we've had in the past. And that downside risk can catch you off guard if you are not at least prepared for it. So I'm not saying it has to happen. I'm telling you be prepared for it so that if it does happen, it doesn't wipe you out. Because if you're still over leveraged and you're just used to buying call options and the market continues to go higher and you make money, that trend eventually will expire and you will get caught holding some nasty bags. And if you're holding something like options, they will expire worthless. And you are going to be very disappointed in yourself if you do not correctly make a plan for it now. So again, it is a bull trend until it's not. I'm not saying we have to go lower. I'm saying be prepared for it. Price action does all the talking. Know the critical levels, manage risk. And as I always tell you, let the damn chart do all the talking. If you want to come get access to all of my intraday updates, my technical analysis, and my trade ideas, that's in my Discord server. And you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.